Good morning, this is Wayne Bilal with another Smart Profit Maximizing Moment, and this is Tessie. I realize you haven't seen her in a while. She's gotten bigger and a little bit of a brat. Let me put her down before she decides to be a pain. Hey, first I want to thank everybody for listening. I apologize, I'm doing a third video on the payroll tax deferral from President Trump. On Monday, I did one. I should have looked a little closer at the regulations. They got released, but I didn't read about them until Tuesday. So, finally we have regulations. They were released on Friday, like I said. The 31st, actually. No, Friday the 28th. So, let's talk about them. This, as a reminder, President Trump signed in a payroll tax holiday. All right, and the payroll tax holiday was on August 8th, was supposed to go in September 1st, which it's September 4th now. Yes, I'm losing track of time. So September 4th, we're coming up on Friday, which is our first payroll, and all employers are going to have a decision to make, okay? So understand what this is. It allows up to the employees portion of the Social Security, 6.2%, and only applies to wages that bi-weekly their gross wages are below $4,000 or $104,000 annual salary. Treasury Department, like I said, finally issued their guidance, which amazes me that they had to wait till right before. I don't exactly understand, especially based on what they came up with. It allows the employers to postpone withholding the employee's portion of the Social Security tax from September 1st to December 31st. But, key point here, employers are not required to actually participate and offer it to their employees. You don't have to. Now understand, employees are read about it, okay? So you're going to want to actually explain what it is. If an employer decides to opt in, the employer would then be required to remit the deferred taxes between January 1st of 2021 and April 30th of 2021. All right? That basically means you're basically not withholding between now and the end of the year and double withholding between January 1st and April 30th. All right? This could be detrimental to employees. We need to actually explain to employees what we're really looking at is a short-term loan. We're looking at a situation where they're getting a loan from this year into next year. Okay? So, that's kind of important. They need to understand. They may get a bigger check this year, but they're going to get a smaller check next year. If an employee quits before the employer can start deducting it, then you can deduct it from their last paycheck. There is important items to keep in mind, since the deferral as it stands right now is not forgiven, and the employer is ultimately responsible for paying it back. Okay? I strongly caution you against the deferral unless you're in certain periods. I'm not planning on taking it back. I'm not planning on participating. I'm telling most of my clients not to, unless they fall into certain circumstances. For example, I have a contractor who has a big job going on. They expect to get paid probably December, end of the year, maybe beginning of next year. And if you know any contractors, they're going to run into serious cash problems because they have to buy all their material and pay all their people, and we're talking about serious money. Now, once they get paid, they'll be able to pay it. That situation, you might want to do it. Now, the bookkeeping on this thing, I'm guessing it's going to be a little tricky. You're going to have to keep track of every employee and how much you took, you better have a bookkeeping department or get somebody who knows what they're doing. So you're going to have to keep track of how much for each employee has been deferred, and then as you pay it off, how much they paid off. Best way to do that in QuickBooks is treat it as a loan to the employee. And if you don't collect it, it's going to be an expense for you, basically. Payroll tax returns, be careful. Like the employee retention credit, I saw people that do payroll returns that aren't like ADP or Paycheck or QuickBooks. They may not be up to speed. I've seen a couple where they didn't realize that there was something they needed to do. The 941 looks very different. I expect I'm hoping for the one that's due in October, they're going to have a line that says how much did you defer. another line. They've added a handful. Okay. Now understand, if you fall into a situation where you're needing cash, there still was in the CARES Act, which passed on March 27, 2020, which allows the employer to take the employee's share of payroll taxes and delay it. And it's really more of a loan. It's a interest-free loan. This Trump's tax deferral is really a very short-term interest-free loan. It's till April 30th of next year. Under the CARES Act, employers can defer their portion, not the employee's portion, their portion, and split it into two payments that must be paid 50% before December 31st of 2021 and the other 50% December 31st of 2022. So for all practical purposes, it's an interest-free loan with no penalties as long as you pay it back in that time by 18 months, a year, 2 years. Not a bad deal. If you're having any kind of cash problems, you really ought to think about it. And it can be for self-employment people too. If you're Schedule C, you can also defer it. So something to look at. Really pay attention. Get with your accountant. Make sure you have somebody that really knows, has studied this, and does the payroll right. I hate sending work to ADP and Paycheck and people like that. I'd rather support your local people and help them. But this might be a time where you need somebody that knows what they're doing. Talk to your guy or gal and make sure they know what they're doing. Ask them questions, show them this video, make sure they know where they're at. End of the day, I would not participate in either of these deferrals if I did not need to. If I need to, I would definitely take advantage of the CARES Act one that delays it till 2021 and 2022. That's more reasonable and very little bookkeeping involved. All right. If I don't need the cash or I have another way of getting it, I would not participate in Trump's executive order tax deferral. That's part of the reason why it's clumsy, because you can't really pass laws by executive order. You work around the edges and there's going to be some problems. So it would be nice if Congress kind of got their act together and tried to help us, but I don't expect anything before election, and truthfully probably not till January or February retroactively to try to help us. Until then, hey, this is Wayne Blau saying thank you for your patience. This should be the last time I talk about this. We'll move next week. The book's coming out next week, thank God. So I'm going to get into that a little bit, cover some of the stuff that's in there and why I think it's very important for right now to help you really, a 90-day profit reset to get back on your feet and take off. I really think there's a good chance, no matter who gets elected. If Trump gets elected, I see the economy taking off and you can take advantage of it. If Biden gets elected, his policies, if he follows through with them, will have a negative effect. There's no doubt about that. I mean, history shows that. But history also shows that my business owners that I work with do better, all right, than without. Okay, as simply as that. In every position, there's a silver lining. Hey, until next time, this is Wayne Blau saying, let's make this our most profitable year ever. Thank you very much.